Hello, swing trading evening daily routine. So for your daily routine, for your swing trading, you will pull your daily transaction history from your brokerage account. You will record that in your swing trading spreadsheet, and you'll analyze the chart to be ready for the next day. So we are going to do that for November 21st, 2024. So we have our swing trading spreadsheet open here, and I'm just going to minimize it. When you are using one screen, that is how simply you can do that. And you don't need a laptop to swing trade if you do not have it. If you do not have two laptops, I'm using 17.3 inches laptop at the moment. Prior to that, I used a smaller version, I don't know, maybe 15 inches or 13 inches or so. But I just like to minimize both screen, both spreadsheets, to have them side by side. If you didn't download your account history daily transaction as a CSV, you can narrow your website as well where the history is, and then have your spreadsheet narrowed as well, so that you can have them side by side and do your record keeping. So let's take a look at Friday, November 21st transactions here. As you can see, we first sold quite a bit, 1 2 3 4 5. So we have 5 sales, and we have 1 2 3 4 5 6 purchases. So 11 swing trades, including 5 sales and 6 purchases. So let's get started, record them on our spreadsheet. So the first one that we purchased is cats. So last time we purchased cats was in October 16. So I'm just going to copy that and insert copy cell. That's what I like to do, so that I can keep the formatting and the formulas in the row that I'm going to make my entry in, so that I don't have to update formula on that row. So we have it here, and I'm just going to put November 21st, 2024. And let's narrow this one a little bit. That's a little bit too much, but the feed does not need to be this big. What else can we decrease here? We can decrease the quantity row, and I think that's pretty much good. And we can just move it a little bit to the side to have more free space for us. So November 21st, cat 20 share, and I like to copy the price so that I can keep the decimal exact to minimize error. So we purchased 10 shares. You'll notice that I'm purchasing the same quantity of share after a certain period of time. So now we are going to, how much we pay for it, we are going to add that in our committed amount, colon, and I'm going to take what I copied. I'm going to take the sold side of that out of that row. Okay, so we bought it a month ago or so, sold it a month ago or so, and now we bought it again. Okay, so now we'll go to the next one, is V, and V will be Visa. So we'll go to V, and I like to have my symbol in an alphabetical order so that I can track them easy to spot, because I'm swing trading the same stocks over and over and over. I like to just have the same stock that I'm trading in one spot. Instead of tracking them by dates, I track them by the symbols, or I organize them by the symbol. Okay, so we are going to copy the last version of V and we are going to paste it. And we will update the dates. It's important to update the dates because we are pulling data from this sheet based on the dates. Therefore, it's good to have the day up to date. So 7 share, the price went up from the last time that we bought it. We'll track the amount committed and we will clean the sold side of it. So the next one is APH. So we'll go to A. We'll copy the last row of A. We bought it, the last time we bought it was in July. And APH, so November 21st, 2024, 20 share. It went up since last time that we got it. Now, as you can see, because they are large companies, they do not fluctuate much. So from last time that we bought it, in July to November, we have $3 difference in the price. At least, like capturing is just 2 time period between that time frame, July that day and November 21st. That is the price between the two. I'm sure it fluctuates between those two dates though. So now we are going to did we even did anything here? Yeah, we did. So 73.45 we pay for that. So let's clean up the sold side to get a reading. When we sold it, we'll just come here and enter the amount we sold it for and the fee we pay for it. We went a little bit further down. Okay, so now the next one is what? AME, still in the A. The last time we bought it was in March. We will enter, am I even doing it right? Let's see here. No, let's make sure we click on the right row. So it has been a while ago. It did go up since then. So AME 6 share. No, we bought 12 share this time. Okay, let's see the price. So the price went up as well. Nice. And sometimes that makes me wonder, instead of buying it, selling it on the same swing, why not buying it and hold on to it for a while? Does that make sense? Do you see, like, I don't even know, let's go a little bit here. February was the first time we purchased it at 168, but then November it is 195. How much difference is that in the price? So a little bit close to $30 a share. And let's just play that game a little bit here. So 195.94. I'm getting off track here. So does that bother you? Let me know, please, if you can, if you do not mind. So minus 168.38. I hope I'm using the right one. Yes, that's this one here. So that's 27.56. Let's take that times 12. So that'll be 330. So if we purchase it in February at 168, for instance, and we held on to it until November when it was like 195 and we sold it, those are just assumptions though, and we sold it because yesterday it was selling at 195. So let's say we had in our portfolio for that time frame 12 share and we sold it 195, we'll have made 330.72 before the fee. Like the fee could be like 6 cents or something like that. So let's just say we will make 330. Okay, so let's keep that in the back of our mind and continue here. Okay, that's what we committed. Let's clean up. This area. Okay, so now one thing I like to do is on the sell side, like let's say when I sell it, yeah, let's make sure we are here. I'm trying to see this side here. Okay, so when we sell it, based on the profit that we sell it for, the profit, like when we sell it, the profit here is just how much we sold it minus how much we pay for it. So if we select those profits, we have not sold the one we bought yesterday yet though, but assuming that we sold it, it'll just be good to just select those and compare that total to that 330 to see which one gave you the highest profits. So when I total those, even though we have not sold the one we bought yesterday, the total so far is 199.16. So 199.16 versus 330. So, and another way to do that again, and let's go, since we have not sold that one yet, let's not include the one we bought yesterday, but just end it on this one here. I still don't know if so we bought it in February. Let's say we bought it in February and we sold it in March. So, and we can just again use, let's say we bought it at 168.38. So the way we are going to do it this time is just take this amount, that's what we bought it for, and let's see how much we sold it last time. after the fee. So we'll take those two numbers into consideration because it's CCs and we sold it the same day. So we are going to take those two and we are going to subtract how much we pay for it in February to see the profits. Yeah, I think that's how we will do it. So let's another way we can do that is just do it by share, which will be 190. So let's take that. So 190.64, and let's go back. That's how much we sold it. In fact, we held on to it until November, and we bought the first one 168. So minus 168.38, so that gave us $22.26 a share from February to November. So let's take that times 12. That gave us 267. So we didn't account for the fee of 6 cents, so let's just say 167 was the profit. So 167 is the profit. If we go back again, and then we use the profit that we have accumulated since we bought it multiple times between February and November. Let's take that profit, and in case you are wondering how the profit is calculated, can these things work properly? So we are just pretty much taking the how much we sold it minus the fee minus the how much we bought it. So when we summarize those two, it gave us 199.16 compared to 267.12. So if you bought it in February and you held on to it until November 6 to sell it, I don't know how many months is that, your profit will be 267.12 versus me buying it, selling it in March, bought it again in March, sold it again in March, bought it again in March, and then it went down for us to hold on to it and sell it in November. We made 199.16 on it. So in this instance, buying it, like position trading, holding on to it for months and selling it, gave us that. In fact, we have AME here. Let's take a look at it. Let's go to, I think I have 3 months, 3 months daily chart here. Let's go to 1 year daily chart. Okay, so February, we bought it in February here. February 12, sold it, bought it, sold it, bought it, sold it, bought it, sold it, bought it, and then it went down from there, downhill. So down here, tried to go up, but was not high enough at the price to the price that we bought it the first time. So we held on to it. It went all the way down, hit the lowest of the year, and then start going up there, up to here, and we sold it. That was in November. Then we bought it again some days later, or a week or two later, which was yesterday. But you see the the history of it. So if you bought it here, which was around 168, the price is on the side here, 168 or so I just like to put it underneath the bar, so I don't put it exactly at the price. But that bar, each bar, because we swing trade on a daily chart, each bar is for 1 day activities of that stock's price. So we bought it on that on that day, 168 or so. And if you sold it on the November 6th, what was it, 190 something, so you'll have made 267 or so profits versus me buying it and it went down, and I just held on to it until I sold it, because we are trading uptrend stocks. They keep increasing in value over time. So the price you bought it before, if you sell it, it's not the price you'll buy it again. Most of the time the price will have gone up, but we are trying to capitalize, lock in those small fluctuations along the chart instead of holding on to it for a bigger profit and sell it. Don't know if it makes sense, because again, do you see how it dipped down here? It didn't phase us, we just held on to it. If you are trying to buy for long term, before you sell it though, this area will be the best time to buy, like the lowest of close to 52 weeks low. When we buy dividend stocks, we like to buy close to 52 weeks low, and because this is 1 year time frame, that is the lowest of the year. When they start going up, will be the right time to buy, and when it reaches the highest of the year, that will be the time to sell it. So if you bought it around 149 and you sold it around 190, which will be more this, that will be the 13th of November, 149 and 196 here. Let's just say 190 to be more conservative, and use 149 again, because you are waiting for that to start going up. Let's see the next day bar, 155. Let's just use 155. So if you use 190 minus 155, that's one share, that will be $35 profit times 12. You remain 420 on it. So, and that is the strategy we use for dividend stocks. We buy a close to 52 weeks low, we held on to it months, some years sometimes, or months, and then we sell it close to 52 weeks high. And that's what we did in 2023, and that's what we did in the past. But for the swing trading strategy that I'm using in 2024, I'm trying to swing on one side of the zigzag. If we take this zigzag, I try to swing trade on one side of this, on the zig side of the zigzag. So buy when it start going up, sell a few days after while it's still going up. Okay, so now that we went off track, let's come back, get back on track. So now we have AME entered. The next one is DEC. You know, that is just those type of analytics that you can do to keep improving on your trading strategy, to see which one is better fit for your risk tolerance, your financial goal that you have in mind to achieve and or to reach, and your personality type. And we do have many stocks that we purchased that went down. We have not sold them yet. We'll see when we get to our chart, our stock watch list. A lot of time I highlight the yellow, and the one that I highlight the yellow are the one that we purchased and we have not sold them yet. And the reason why we have not sold them is not because we want the profit there to keep growing, is it has a huge profit to keep growing, is because they went downhill after we bought them, and they have unrealized losses on them. Therefore, we just kept them there until they become profitable. We just saw an example of ME. We bought it around March, and we couldn't sell it until November, because after that, it just dipped down and down and down, reach a low point before it start going up again. And I had to say that even swing trading, I really like our dividend stock strategy, purchase strategy though, trading strategy though. And I think it's more like position trading. Buy it close to 52 weeks low, sell it close to 52 weeks high. And it's a little bit more on the passive side in the sense that you don't have daily transaction to track much, because you are not buying things daily. You might buy things on a monthly basis. You know, when you get paid, you move some money from your paycheck to your investment account, and you just find the next stock that is close to 52 weeks low to buy, and you just buy. So now let's come to deck here. So deck, let's copy. Still don't know why I have it right though, but I think I update, copy, insert. I inserted at the wrong spot, but let's see. That's just too far up. Okay. So while that is working, let me see if that was here that I put deck. No. Okay. Usually I highlight things when they are a little bit weird looking, so that I can pull the history of my purchases and sales of that stocks to see if I track it well on the spreadsheet. So that might be why I have it red. So whether I check it already and I agree on my transaction or not, I'm not sure. So I'm going to keep that one red, and I'm going to turn this one black so that I can double check the other one before I take the highlight out of there. So November 21st, 24, 2 shares. During the week, we didn't sell much. Okay, now I think the reason why I have this like this is because, is it? Okay, I should have updated the number to buy on my watch list at this now. That is not good. I bought very little. Okay, so what happened is, let's see, at some point around between June and November, this stock split. So while it still was in our position, in our portfolio, we bought one share around $1,000. But by the time we sold it, it split. It split dead. And let me put the amount committed here. And I don't know if I did this for AIMS, for what? EME though. Let's go back there. Let's not forget the train of our thought here. But let's go back. Okay. Yeah, we did it. Okay. I just want to make sure I put the committed amount there. So now let's go back to our deck. He split, and I don't know, is it 10? Excuse me. So yeah, I should have updated the number of shares to purchase. I didn't. So for $1,000 a share, we bought 2 last time. So now that it's selling for 180.86, we should have bought more than just 2. Having that little number of shares, we will have small profit on it. Let's talk about this if I do not forget when we get to our chart. So now that we clean up this side, so I have to keep this in mind so that I do not expect our minimum profit of $25 off of it before I sell it. The next one is URI. It will be in the U. Okay, so the last time we bought it was on the 8th. And now we bought it on the 22nd, on the 21st. So we will up the dates to 11/21/24. We bought 3 shares. Let's see, 3 shares. The price went down from the last time. Let's continue and commit that amount and clean up the sell side of it. Okay, so now we enter our sales. Although when we are placing the order that day, we sell first and we buy second though, but the transactions, organize them, the buy first and the sell second. I don't know if you're organizing it by the letter of the action or what, I'm not sure, maybe. Okay, so, and now by the occurrence of the transactions, I'm not sure. Okay, now let's enter our sold. After we spend money, let's make some. So let's go to WXO, which is a neighbor of where we are, close to the V. Will be probably about the last one on the list. Okay, so let's copy. No, we don't need to copy because we'll have a row ready for us to put our sell. So we bought it on the 18th. Let's take what we committed because we sold it. And we sold it on the 21st. And how many stocks sold? 3. How much we sold it for, or sold them for? 545, and the fee keeps going up. And let's see how much profit here. 59.26, and again the profit is taking how much we sold it minus the fee minus how much we pay for it. So we bought it on the 18th, we sold it on the 21st. So let's go to the next one, is COST, Costco. Oh, come on. Okay, Costco, we bought it on the 13th, 3 shares. Let's take our committed amount out of there. We sold it on the 21st, 3 shares for $9.53. And the fee is what, 8 cents, and the profit is 57.97. Can go a little bit to see the rate there, and the rate is just taking the profit divided by the cost. Okay, so now let's take COR, which should be a neighbor of cost. CORST should go up. Okay, we bought it on the 20th. A day prior, and we sold it on the 11th, 21st, 24. How many shares? 10. $2.45. $0.07. The profit is $27.97. So it exceeded the minimum profit target, which is $25. And yeah, so we sold it, and with minimum per trade, average per trade that we say is 2,000, and minimum profit target is $25. So we sold it to lock it in. So the next one is B. B should be a neighbor of C. Let's go up. Okay, so we bought it on the 20th, a day prior. We take the commitment out of there, and we sold it 1 share. My mouse is so jittery. It's not really a mouse, it's like the keyboard pad. It's like I fed a coffee that I don't drink or something. Just so sensitive. I try to turn it down in the setting, but still it's sensitive to touch. Okay, so we sold it, pay 14 cents a fee on it, and we made $200 profit. Sweet. And you see the rate. The rate is taking the profits divided by the costs, and that's it. We didn't annualize the rate. We just take the profit divided by the cost to just make it simple. Okay, so we bought it one day and sold it the next. So the next one is AJG. AJG, I think we bought it for a while. Let's see what we will find on AJG. And let's keep in mind BKNG that we bought the 20th and sold the 21st for 4% return. So this one, we bought it in September, and it took us up to November to actually sell it. So let's take this commitment out of here. November 21st, 24. How many share? 8. Copy that. We sold it. I think we might pay the fee. Fee went up. And we made $27 profit on that as well. So let me put this here that we recorded on the 22nd or the 24th. It's early in the morning. I didn't do it yesterday because to do it yesterday I had to wait for my children to actually calm down, fall asleep, and that'll be me taking a nap in the couch, on the couch for an hour or two, and then work on it. And I said, you know what, I like to go to bed early and wake up early. That way while they are sleeping I can do the recording. So if you are a mother or a parent and you have kids around and you wanted to start a YouTube channel, but maybe the kids' noise is what is stopping you from doing it, one way you can do it, there is two ways I like to do it. So one way you can do it is just to go to bed early when you send them to bed, and wake up early while they are sleeping and do your recording. And then during the day, what you can do around them while they are making noise, you do that related to your business. The second way you can do that is you do your recording, because there's a screen recording in this instance, or if you are sewing or you are cooking or you are trading and you want to record that. For the things you are doing on your computer, you use OBS or any screen recording software. You record your screen while the kids are making noise around you, or you sew while the kids are making noise around you, or you cook while the kids are making noise around you. You record those actions and later you mute it, and in the morning while the kids are sleeping you can just rewatch the video and record yourself, like record your voice. And sometimes I just use OBS to record it as I'm watching it, and later I'll take it to the CapCut editing software. The image will be what I recorded while the kids are making noise, and I will remove the voice out of it, and then the second recording that I did while they are sleeping, watching what I recorded and now talk, I will take that one, remove the image and just keep the voice to put it underneath the muted video, if that makes sense. That way I'll have two together. It is extra work, but it allows me to post my recording of some content that I like to record during the day, like sewing for instance. I like to record it during the day using daylights on my sewing machine, but then that means, and then I like to sew where my kids are so that I can keep an eye on them. Or while I'm cooking, I wanted to record something of it, yeah, I'll do that. And sometimes during recording I can just do that as well. But then if I did that, I would have done this, and now I will talk about it, take it to editing software, and take the voice out of my action while I'm doing my record keeping. And while the keep were making noise, take that voice out. And this morning voice, as I will watch what I did and talk about it, then I will take the image off of that one and use the voice and combine both in the editing software. But for my daily swing trading routine, I do not edit it. Therefore, I will either wait for them to fall asleep, me taking a nap or working on other things in the meantime, which I did. I work on other things in the business while they were making noise in their room, and just decided that it's just better, instead of taking nap and do the recording yesterday night, it's just better I go to bed and wake up early, which I did. I woke up around midnight, showered, and in fact I stayed in the bed until 1 in the morning before I got up, even though I woke up around a little bit before 1, and then I shower and start my day with this recording. But yeah, it's just, you just have to see how you can manage your business, and your family and your obligations. So, but it's just, again, we went off track, sorry about that. So now this conclude this record keeping. So the next step will be to analyze the chart for this morning, because this morning is Friday. When we trade around noon, we want to be ready for it. So let's save everything here, and let's not forget about DEC and AJG. I think since we saw it, we'll come across it anyway, so it's okay to forget about it. On not the DEC, because DEC we bought it, so we are not going to analyze it, but AJG we saw it, therefore we'll analyze it. So now that I saved everything, it's taking time. The document is a little bit big. Oh, before we move to the chart, it's good we check our numbers to make sure nothing is skewed here. And the way I like to check it is just click on the monthly chart, and I like to make sure I track it 2 ways. I just like to make sure my numbers are okay here, and that's it. That tells me that I didn't pull a number at the wrong spot. So no dividend income was paid to on Thursday. So let's take this out of here, and let's go to our chart. And for our chart, we need to bring our watch list. And our watch list, again, is a watch list that remain the same. And let's start with the first one. The first one is AJG. In fact, before we do that, let's make sure what we place the order to sell and what we place the order to buy, they all went through for us. Because we are going to take that mark off there. Let's I tend to forget that, but let's do that. So we bought cards. Let's make sure card is highlighted. Yes, we bought V. Let's make sure we highlight V, because what we highlighted we are not going to buy it. That means because we assume we have it already in our portfolio. So I want to make sure I didn't place an order to buy something and then it didn't go through, and I highlighted anyway. So V, we highlighted. Let's go to APH. APH, we highlighted. DEC, we highlighted. Okay, URI, we highlighted. Now we sold WSO, we should take highlight off of it. Yes. We sold Costco. Let's go back up. We should take the highlight off of it. Yes, we did. We sold COR. We took the highlight off of it as well. Yeah. The thing is, when you sold it, you don't take the highlight out off. You might think you have it when you don't have it, and you might miss some occasion to buy. And when you bought it but you didn't highlight it, you might think you didn't buy it, you might buy it again. So when we bought it, I don't like to buy it again until we sold it. So which one is the next one? That would be BKNG. BKNG, we took the highlight off. Okay, AJG, we took the highlight off. So everything we wanted to buy, I think we tracked them all, right? AME, yeah. APH, yeah. Access again, work to cards, yes. Deck, yes. Because we made it right the day before, we highlighted it yesterday when we sold it. URI, yeah. V, yes. And that's it. Okay. So now we can lower this. And we can bring our chart and we start from the beginning. Now we are going to do chart analysis for the stock we do not have in our portfolio, because out of the CCA stocks that we have also, we are not going to analyze CCA stocks every day. We only analyze the one that we didn't buy. So AJG, because we sold it, then we don't have it, so let's analyze it. Okay, so AJG, you see we bought, I think my daughter must have used this one. She uses the highlight that is brighter than mine, so I bought it, and it does not show when I sold it, but it's showing that I bought it again in June. I sold it, I bought it again, and then it went down, and I held on to it. That'll be September here, yeah, 9/9. The date is at the bottom of the screen. So we bought it and we sold it yesterday. So we bought it and it went down. It went up, but not high enough for us to make enough profits. From there it went down again, went up, but not high enough, and now it start going up because we have multiple green bars here. We are not going to buy it today. So we like to buy after the pullback when it start going up at the first green bar. Therefore, we are going to wait for the pullback. So let's move to the next one. The next one is BKNG. BKNG. So you see, I'm just analyzing the one that I highlighted on my watch list. So again, BKNG, I don't know why it does that, is a green bar. Therefore, is like two green bars there already. Therefore, we are not going to do any. Oh, before I do all of that, let's take the red off of our spreadsheet. That's why we double check to make sure things we highlighted the day before, we took them out. So now the next one is CL. CL is going down, so we are not going to do anything there. The next one is COR. COR. So if I don't click in here, this area will remain highlighted. It just makes it a little easier for me to analyze those charts. Therefore, I prefer to just analyze instead of trying to trace the trend line. So we have two green bars here. We are not going to do anything with it. It needs to pull back, and when we see the red bar, then the first green we will buy is COST. COST. We have 4 days green bar there. We are not going to do anything. It needs to pull back first. FI. FI, we have a red bar yesterday. Even though it reached a high, we have a red bar. I like this trend here. Let's just take some time to highlight this, trying to will activate that line. Okay, now I just held on to that. When you have a mouse pad that is so hyper, you just want to get the work done. Precision work is a challenge. So I'm just touching the base or the valley of those mountains, or zigzag. But yeah, and I can even find another line going there, but I had to get off of this arrow to a line, and I can just start from that low. I touch this will be more the trend that is going now. No, it's too high. Yeah, will be good. Okay, so that's the trend line we are buying on, or we are trading on, buying and selling on. But we do have this one that is a little bit longer, like time wise from where it came from, that there is a chance it could fall back on that as well. But seems to be, you see, it does not fluctuate much, have small fluctuation. So, and this will be a good stock to purchase and just hold on to a long term. Like, let's say you bought it November last year, and that's why I like trading the same stocks over and over and over, because I'm hoping over time I will get to understand them better without wasting time on other financial document of those stocks. So it has a things that it's just my opinion, just based on this. So it has, you see where I put the mouse, I'm seeing November 22nd. Again, it showed me 1 year time frame. So it has a things of, I won't say that really, because do you see this? The lowest point was in November, the highest point was in November. So who knows? Maybe this November could be the lowest point for a year from now. I have no idea. So then anytime you buy it might be a good time, maybe. But yeah, it's just that if you have purchased in November last year, 125 versus 215 will beat your profit per share. So 215 minus 125 is that $90 a share. Don't know how much of that share we have been buying, but anyway, so let's make it a little bit big for you to see. I don't like to make it big when I'm analyzing just that I can do it fast. But we have a red bar yesterday. So today, if it start going up, we see that means that red bar tells me it pulled back. The price yesterday, the market closed at a price that is lower. That was lower than the price the market opened in the morning. So that day in overall, the price went down. So I will say it pulled back. So today, if it start going up, the first green bar of that swing, that zing, we will purchase it. So in that, for that reason, I'll come here, I'll put red. So during the day when I'm going to trade, because I trade during my lunch time, I have a small window to work. It is not the best time of the day to trade that I'm looking for. I just have that time available to trade. It's not a fixed time, because sometimes I will work through my lunch time and I will check around noon 30, but I'll just prefer to continue working on what I'm working on, and then around 1 I will check, and sometimes I'll say, you know what, I really need to trade because it is another stream of income of mine. Therefore, I need to trade, and I will actually push to actually trade, look in my account and do what needs to be done. So sometimes I'll do around noon 30, around noon, or around 1, or around 2, which is 1 year, which is 1 hour, because I'm in the Middle West and the stock market is the east, so they are 1 hour ahead of us. So I'm just putting that in perspective for you. But yeah, so when I'm going to trade, I don't pay attention to what I didn't mark red. I just only pay attention to what I mark red. I will analyze them and buy or not buy. Okay, so the next one is going to be, in fact, before I took that red off, we'll come to an NVDA. I don't know if you noticed it, but NVDA was marked red but not highlighted. So that means it pulled back, we mark it red, but yesterday it did, at the time we were trading, it didn't show the first green bar, therefore we didn't buy. The next one is Google. Google is not going up yet. So the next one is HD. So the HG, we have the first green bar already. We are moving on. We are not buying it on the second green bar. We want to buy on the first green bar. Okay, LEND is going down. 10. Let's leave it alone. Let's go to, so we have MCK and MRK. Let's see if we can memorize those two. MCK. Okay, MCK is fell on this and start going up. Okay, so let's put the mouse on it. If it pull back and start going up, we can do something about that. MRK is going down, reach the lowest point and now start going up. For this, that is a stock that if I want to, how much it pay for dividend, if I want to buy at the 52 weeks low and just keep it in the account and wait how long it takes until it reach 52 weeks high and then sell it, I will do that. So 194 and 94. I might even test it though to see what I can deduct from that experience. So 134 is the high, minus 94 is the low. That will be $40 a share. $40 a share. So, but how long it takes for that? So this one was in June and this one is in November. Okay, so if I wanted to buy a 52 weeks low and sell a 52 weeks high, what I will do is go to maximum daily chart, and we will do it will not, yeah, why not, let's do that. Lower that and let's take a look at those lows. So we see this low here is in a November, and then we see this high here is in June. So it tells me that so you see, and that is 2023. So the lowest point, yeah, the lowest point is, we have October, we have December 1st. Okay, then it start going up. So it'll be good for me to try that. I will, since it start going up already, it'll be good to buy it close to 52 weeks low and just wait until next June and sell it. But then you see those high here, I won't capture those highs here. So the maximum weekly daily chart is showing us those type of big fluctuation that it tends to do. So we have the lowest here, we have this one, and we have this one. So let's go to the maximum monthly chart to actually see. Okay, it's just common for these stocks, I don't know what that is, but to have those big gap, those big swings. But it's following an uptrend here, and it paid dividends, so I could buy it and just left it there and see in June what will come out of it. And take note of that. MRK. So I'm just going to put position trade. Okay, I just had to think about which account I want to do that in. Okay, so again, sorry for off track here, but it's just showing you, you know, how you can just brainstorm and keep testing the strategy you are using, keep switching it to, why am I putting it on MS? Is not this one, is MRK. Is it a medical? I think it's a medical things. MRK, that's the one we are talking about. I can unravel here. I will see what that is because I have the sector in there as well. But anyway, so will you please let me know if those type of going off track and brainstorming aloud with you, if that's something you like or not. I can promise that I won't do it though. Okay, I don't know what I click on. No, I'm not going to add the study to chart, but I definitely click on something. So because again, that's something I need to do every day, and I'm just recording while doing it. But I have to say that when I'm recording what I'm doing and I'm talking about it, I think deeper into it versus if I'm just doing it by myself. I'll just go quick within 15 minutes or so I'll be done with the chart and move on. But by actually sharing what I'm doing with you, it pushes me to actually analyze what I'm doing instead of just doing it out of reflex. So this one pull back, so you see, that's what the one that I'm talking about. So Thursday evening we saw this pullback. We mark a red on our watch list that if Wednesday we saw this pullback. This is November 20th. So we saw this pullback. We mark it on our watch list that if Thursday the 21st we have the first green bar after the pullback, we will buy. So that Thursday we saw that it reached the high, but it was a pullback again, therefore we did not buy. So because it opened at the top of the price, it closes at the bottom of the body. It opened at the top of the body, it closed at the bottom of the body. So the price went down in overall. See, it opened and closed there, but during the day it fluctuated like that, has the low of the day, the high of the day. So because it was a second pullback, we didn't do anything yesterday with it. So since we still have a pullback, we'll mark it red on our list. If today we have the first green bar, we will buy. Today is Friday, but it does not matter. We will buy. I tend to take those into consideration. Oh, it's earning days, or it is Friday, but now I don't even take those things into consideration. It makes it simple for me. At least I bought some of them that didn't fall on Friday or on around earning time, and they have unrealized loss in my account, and they are sitting there. So what bother avoiding certain stocks that I could purchase because it's around earning time or is on Friday that the situation presented itself to buy. So I do not, if I buy it goes down, it just stays in the account. It might pay me some dividend or not, but it's there. So this one, I don't know what's going on with it, but it does have a big fluctuation going on here. This could be like a trend trading strategy or something, because at the beginning of the trend we have the low, toward the end of the trend we have the high, and then we fell back off again. You can have this here, but anyway, it's just too zigzag here to actually now have our eyes going in circle in our brain. So let's continue to the next one, TRI. You can actually make money on that if you know what you are doing, but again, I don't want to think too hard on that. So this one is going down, so we are just going to leave it alone. But again, it does have big swings though. I have to really find a way to know how I'm going to trade those big swing companies. Like, is it going to be position trading or something, or what? Because here we have this low again in November. In May it reached the high. So is there something that usually it goes down around November and reach highest point in May? Then that would be, if that is like a common thing for that type of stocks, then that would be a good thing to just buy in November and just let it be and sell it when it reach 52 weeks high around May or so, and sell it for a bigger profit. But for my swing trading, it is in a weird turn here, kind of consolidating and going down around earning time. Let's leave it alone and keep an eye on it. But if I can find those that I can use my 52 weeks low purchase, 52 weeks high sold strategies too, I will keep using that strategy on the side as well, because that's a strategy that I really like. So this one is on a downturn here. Let's leave it alone. So the lowest point was again in November, and the highest point again is in November. So November you can be on the lowest point, November you can be on the highest point. I'm not seeing consistency here, so we have to use the maximum daily chart to actually see where can we see the repetition, what months it tends to go very low and what months it tends to go high, and on the maximum chart to see if we can find prior year that consistency remain, and use that to buy it close to 52 weeks low and sell it close to 52 weeks high. That things. But when you are using 1 year chart though, when you see that 52 weeks low, that a stocks that you are analyzing reach 52 weeks low and start going up, if you know that that's uptrending stocks, that could be the time to just buy and just keep it in the account until you reach the high and you sell it. But again, it'll be the high of the year. But anyway, you have to play with the time frame and have some time deadline in your mind, in your record of it while you are tracking it. So the next one is Walmart. But this year I'm swing trading to actually understand that trading strategy, since it's my first year swing trading, to see how I can, improve on that strategy that I've been using. So I like the way Walmart's chart is. It's kind of smooth, not much of swing going on, but we have multiple green there, so we are not going to be able to do anything today. It needs to pull back before we can get in. WSO, we have one green bar already, so we are not doing anything today with it until it pulls back, and when it starts going up, we will get in. But yeah, and this one, the lowest point was in February and the highest point was in November with multiple zigzag on it, where we swing, we trade on one side of the swing. I don't know why this is standing up here doing nothing, but this needs to be, I don't know. But anyway, so thank you so much. Now we are done with record keeping of our daily transactions and analyzing the chart for today. Let's see how many stocks we are able to turn red here, that we will analyze the chart again to see, one, if we will buy or not, two, two. Okay, so two are the ones that pull back, and if today they are going up, we will buy them. So those are the two things that I will analyze from this chart. But I don't know, I'll first check our account to see if anything. That is one thing that I say when I was doing the bookkeeping that we'll talk about, if I didn't forget. If anything meet our minimum trading limits, minimum trading profits. So we have about $2,000 that we allocate per trade, but it varies though. You saw the way we did the record keeping, most of them were over there, and there is something we need to adjust. Was it deck? I think it was deck. DECK 191. So we'll do 2000 divided by 191.91, whatever, 10. Okay, so this number of share, that's something I take a look at. And when I'm going to buy a stock, they see those two that we highlighted, FI and NVDA. I'll just take a look at the number of share next way, and I'll place an order. I don't try to do division between how much we want to spend per trade by how much is selling at that point to see the number of share to buy. I just kept the number of share the same so that I can terms to terms analyze our record keeping spreadsheet to see, well, for buying it so many times during the year, if I just purchased it once and then sold it, at whatever date in at the bottom, like, and sold it here, bought it January and sold it there, how much the profit is going to be. I like to do that, and I think I like it when the number of stocks that I'm purchasing are the same. Otherwise, yes, you can do that based on one share as well, but I like to keep the number of shares the same. So as the price keep going up, the minimum per trade goes up as well, but I'm okay with it. So because I didn't update this one, I end up buying 2 shares today of it, which is not okay at all, because, well, maybe with those 2 shares, when I reach, I don't know, $5 profit, I might just sell it also. But it is the $25 minimum per trade set, that when we have $25 profit, I sell it. Sometimes 24 I will sell it. Sometimes I've been selling really lower when the stocks kept going down and go up, and we have a little bit of profit. I can sell and get out of that stock until it turns around. but we have, you know, amount per trade set as well. And we have our rules. 3 solid green days, whether it read at 25 or now, we can just set it and get out of it. Because again, depending on the stocks you are trading, you can look at the trend line you are trading on to see how many green days in average you have there. If you have 5 green days between the pullbacks, then you know you can wait for, if you want, 4 days if you have green bars or so. But if you have 2 green bars and then a pullback, then you know that, you know, 2 days you need to sell it. But we tend to go with average 3 green bars unless they pull back on us before that, or we reach $25 or more before that. That it was an example of BKNG. We bought it the 20th and sold it the 21st for, you know, over $100 profits. And we use 1 year daily chart for our stock analysis. And I tend to use 3-month daily chart for trading, because 3-month daily chart just can make a big, I don't use it, I don't even do it when I'm trading, but it just make it bigger so that I can put my arrows right on the bar. But using the 1 year daily and not zoom in, I tend to put the arrows wherever it can fit, because I'm doing a quick. I have 30 minutes to get things done and go back to work, and I just want to just put arrows on where I'm buying and put arrows on top of where I'm selling. But yeah, this concludes this session where we share our swing trading evening daily routine with you. I'm still going to keep calling it evening daily routine because it's supposed to be evening routine, but for recording purposes, I prefer to do it early in the morning whenever possible, so that I don't stay up late, but just go to bed early and wake up early while the kids are sleeping. It's quiet in the house, I can do my recording. So thank you so much for watching. We thank you very much for your time. We thank you very much for all of your comments, and we thank you very much for watching our videos. If you want to swing trade, yes, I would say it's good to learn a strategy that you like and start a little by little. I never paper trade. Swing trade has that option. Think of swim had that option, but I never used it before. I just, when my husband and I start trading and investing some years ago, we just start small with $100 or so and just go from there. We bought a lot of penny stocks because with $100 it's not much we could purchase. We buy close to 52 weeks low, and a lot of time we find those penny stocks, oil companies, I don't know, like oil tankers or something like that, and we'll buy them, and when they are close to 52 weeks high or they have some profit, we'll sell them and we double the money like that. And those companies, some of them bankrupt on us as well. So, but yeah, and that's just by doing that little by little. That's how we find out about our 52 weeks low and 52 weeks high trading strategy. It's just something we come up ourselves. So, but I don't know how I come up with that strategy, because we actually screen stocks by 52 weeks low to find them, and we buy them and we just keep it in the account and keep an eye on them. And when they are reaching 52 weeks high, because on the account, Charles Schwab account, they will show you a small bar of 52 weeks low and 52 weeks high in the page of each stocks that you click on that you have in your account. And we just keep an eye on it, and when it's close to 52 weeks high, we just sell it for a profit. And I really like that strategy. What kind of strategy it is, I have no idea. But now that when I'm learning about swing trading, I came across position trading. I didn't know about those terminology before end of 2023, even though I've been trading stocks and investing in dividend stocks for years. But Yeah, and I associate position trading to be close to our 52 weeks low and 52 weeks high trading strategy. But again, we combine it with dividend stocks at some point as well. And just after we stopped trading penny stocks, we went for dividend stocks. Since we are going to hold on to those stocks for a while in the account until they reach the 52 weeks high, they must well pay us some dividends. So we went for dividend stocks to purchase. But yeah, and so but those dividend stocks, they pay high dividend, but they fluctuate quite a bit. And now that I learned about swing trading and start doing it this year, I wanted to some positive things from swing trading. I like to apply that to my dividend stock investing strategy by investing in dividend stock that are uptrending stocks. They might pay low dividend, but I think it's just better because those dividend stocks, if I put MO, that is a tobacco company, and if I put, is it maximum? Let's do maximum here. It tends to fluctuate quite a bit, and that is one of dividend stocks that in fact, I sold it here. If I have kept it, that is where it could have gone, but it reached some high here and I just sold it. But we kept it for some years because we purchased it multiple times. If I went to maximum monthly chart, it does, it was a good company to put in my dividend stock portfolio though, because it's still going up. If I try to do this, it's still going up. Okay, I'll just leave it like that. But do you see this? If you are the one that bought it somewhere here, you had to wait for a while for that to reach that area again. So yeah, having this trend line, it could be a place that you might actually trying to buy at. If you are going to buy and hold on to it for a while before you sell it, earning dividend. Otherwise, this big jump here, it'll take a while before it goes there again. I just feel like those stocks that pay high dividend, they tend not to go up quite a bit. Like they tend to, some of them can be kind of downward a little bit if you are not careful. That's why I like to use maximum monthly chart to see the chart from far, to see the overall trend of that stock, to see if it's worth having in the account, so that they are not distributing your capital back to you as dividend income incremental type thing. So but the capital sitting there while you are earning that dividend income, you want that capital to continue growing. Does that make sense? While you are earning dividend income, you want that capital to continue growing, so that when you decided to sell it at any point, you can make profit on it. So you want to be able to buy at I don't know why I keep doing that. You want to be able to keep buying. You want to be able to buy at a point that is, you didn't buy it at the highest point, and then it went down from there. But yeah, I like dividend income. I like the one that pay high dividend, but that is the trade-off. Your capital won't grow fast; it'll grow slowly there, while you are earning that small dividend income. Compared to the swing trading stocks that I'm trading, that are uptrend stocks, they keep growing. Some of them pay small dividends, some of them don't. So you have to see which do you want your capital to grow while you are earning dividend. Then you might choose those uptrending stocks that pay small dividend but keep growing up. And I tend to choose stocks for my watch list, stock companies that have been around before 2008, to the exception of some tech companies like Google. because I don't want to invest in young companies. They are too young for me to trust them with my money, if that makes sense. They might make you more money fast. I just want to trade stable companies that if they goes down, I'm not going to sell it for a loss. I'll just leave the money. I just leave them in my portfolio until they come around. And you saw we came across a few of them. AJG was one of it that we purchased and held on to it for a while before we sold it because it went down. So yeah, thank you so much for watching. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and in asop.com, our blog. On our channel, we share different ways you can save money and different ways you can make money to reach your financial independence where you do not depend on an employer to provide for your family. And swing trading stocks is one way to make money on the side. Thank you. We thank you very much, you all that subscribe to our channel. Thank you.